In this Forex strategy trade review, the CAD yen was introduced in our previous video as an opportunity waiting to happen. Well, it did happen. In today's video, we look at that CAD yen trendline breakout. We add the lipstick and show how 100 pips was made. We also identify another potential setup on the Swiss yen. And as a bonus, if you watch to the end, if you're a struggling trader trying to make a profit trading Forex, you get to have a one-on-one free coaching session with All Trades 245 himself. Here's a disclaimer, it's required by law. Please subscribe as you see value. And remember, we enter all trades with risk. Let's get to it. Hey traders, how you doing? Hope everyone is well. Previously, as a bonus, what we did was we had, having discussed this trade here, this was a beautiful trend line break. We took this trade down here, and at that video, when we did that video, as a bonus, I set you guys up for this trade here. Okay, I showed two ways that the trend line could be placed, and what we now see is that subsequent to that arrangement, the trade has taken shape, has taken form, and of course, as we put the lipstick on now, you can see this level here, which was violated there. And you can see, look, price has gone all the way down to at least the 300. We've got the pullback to the 50. Good Lord, that's 129 pips. Not a bad trade. When we spoke about this trade, it had not even happened yet. This and all of this wasn't there. It was just this. Because we was talking about this previous trade. So this was a setup in the previous video. Let's just take a brief look at this trade. Here's a clear break of this trend line there. If you've got the lipstick, let's just pause across here, just to get the numbers here. See, 50%. So let's just put a little lipstick on real quick. This is just going to be a short video, guys. Here's the 50% fib. As you all know, that's going to be the entry. Okay. Here's the 100. Break below the 100. That's going to be entry number 2. Okay. And then we're going to have take profit 1. So TP1, TP2, and then here we are. This is just a runner, isn't it? There we go. Just an exceptionally beautiful trade. We spoke about in advance, which is a good thing. We take these trades all the time. That's 100. It's 117 pips to the 300. Let's just do our take profit 1, 47 pips. And our take profit 2, 47, 48. 48 and 47 is 95. Actually, we can even mark that on the chart, can't we? Yeah, so 47 pips, and this one here is 48 pips. Simple trade, guy. Simple trade, guys. Very simple trade. And cash in the bank. If you got out here with 47, 48, that's 95 pips. You did all right. If you had a runner and you ran that bad boy all the way down here and cashed in on 100 pips, well, listen, either way you slice it and dice it. And then as you notice this trade has come down here, what do you see happening here? Do you see a trend line break? Break of the trend line, pull back, boom. These trades happen time and time again in the Forex markets. Money's being made every time the trend line breaks. It's obvious that the algorithms read the market, and when these trend lines break, they're in the trade. Because if it weren't the case, it just wouldn't be happening with such a level of consistency. So this is the CAD yen. Does this work on other currency pairs? That's a pretty good question. What we're going to do is, having looked at this trade, having put the lipstick on this trade, we said we're going to identify another potential breakout. So here we're going to look at another yen pair, by the way, because this is the CAD yen. We're going to look at the Swiss yen. Now, as you can see, let's go through this trade quite simply. It hasn't happened yet, okay? It has not happened yet. Here's the trend line, okay? You can Google this, rising wedge. That is, in and of itself, a reversal pattern, okay? And this, what's likely to happen here, is likely to go up and down, up, and then break. Pull back, and then the continuation. That's what we're looking for on this trade. But let's just give a little bit more depth to what we're looking at and why it's a potential setup. In one of my previous videos, I have shown this before, okay? Here's a little bitty trade that we're looking at. Look at all this movement in price. This is the daily chart, people. The daily chart, each one of these segments, that's 1 month, 2 months, 3 months. Each one of these segments here, these period separators, is a month apart. So here we are now, March 2021. Over here is August. That's 3 years ago. Nobody's got, I mean, that was a trend line break, right? But nobody's going to be in this trade. Look, that's a year, right? And then you look up there, 2019 here. Nobody's doing that. I mean, come on, guys. Seriously, we got to trade in a way that's practical. Okay, this is a month. This is a month. But look, we can see there was a trend line break in there, and then payment was made in here. Right? But this is such a big chart. Again, we're not really looking at this chart for that. But what we're going to find on this chart, real quick, is if you scrunch it up, hey, there you go. Can you see that? Levels, levels, levels. Often in trading, they say that people rest their stops above these levels. Stop orders are placed among them. The market makers know exactly where they are. But also, you may have seen a similar video such as this, where, you know, they'll go and they'll say, look, there's support, resistance, resistance, resistance. Resistance. So what do you think? Oh, look, resistance, right? So what do you think's happening here? Likely going to be resistance. There's another school of thought, though, that resistance, when hit enough time, 3, 4, 5, 6, there could be a breakout. See? That's a possibility. So with this trade, although we see a rising wedge here, we are fully cognizant that there could be a breakout, and price goes up to fill this liquidity void. Oh, look at that area here. Let me just have a look. Yeah, look at that, that's empty. So that's a liquidity void. Okay, it's void. It's void of any activity other than this what looks like, oh yeah, there's a fractal at the top there. Other than this wick, right? So likelihood there's orders up there. So price could. Now, if it pushes through, what you know, oh, good one. Let's just get these drawing tools right. If it pushes through there, what we could observe is it's a triangle break. This is another pattern that you should know. You see, it's wedging into this triangle now. If that breakout happens, that's a breakout up here. So this distance here, I often think of this as a garlic crusher. Do you know what I mean? You put pressure on here, it crushes, and then this translates, pushes through up here. This pushes. So if it breaks above, the expectation will be that this will be that. Okay? That's on day chart. However, if it does not break through, and then we get a similar thing such as this, right? It acts as resistance, pushes price down. And there's a few things to notice. When it acts as resistance, push it there. Then the second time it pushed it further. Then third time it pushed it even further. Then here it pushed it less. Here it pushed it less. So it's giving me pause for thought, like, okay, this really could push through to the upside. So that's something to be aware of, right? And then the other thought of the matter is, if you're down here on the eeny, weeny, 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 weeny chart, from the daily, which is a monthly, to a hourly chart, with the hourly chart, it's quite simple, right? These segments, period separators, separate each day, one day from the next, okay? Whereas on the monthly chart, it is a monthly separation. And here's the trend line. So if we get this, right? Our thoughts are we're going up. Right? If, however, we get this, our thoughts are we're going down. Either way, it's a trend line breakout. This is a trend line. This is a trend line. That's a horizontal. This is a diagonal. Most of the times we're trading diagonal trend lines. Okay. So a breakthrough, pullback, and down we go. We'll be in that trend. A break up, we also know what we're looking for. There's a lot of pips to be had if it breaks up, because we're looking at this much, as I just showed you. And that much is a significant amount. Let's have a look. Remember, we said like the garlic crusher. So that was going to translate above, right? So let's measure this so that we better understand how much we're working. How many pips is this? That's 233 pips, guys. That's a beautiful trade if it goes long. If it goes short, we'll be happy for our 100 pips. Yeah, we'll be happy for that. Okay. So that's the trade setup. We're looking forward to seeing what happens, what the outcome is, and we'll post a video when it does. Thank you for watching, guys. Please like, subscribe. Please share the video. Comment in the description box below if you have a currency pair that you would like us to review when we see a potential trade setup. And if you're a struggling trader, you have an opportunity. This is the bonus. An opportunity to get a free one-on-one consultation with the trader, All Trades 245 himself. Okay. Simply look in the description below. There's an email address there. Simply send the email across, and we will choose one person, okay, randomly, to provide with a one-on-one consultation to help you get a better understanding as to what you might be missing. It could be just one little thing that'll help you become a better trader. Look forward to seeing you on the next video. Until then, guys, thank you very much, and bye-bye.